what a disastrous week it was for the markets. Not, yeah, good job the markets on fire. Nick, absolutely. I mean, there is money in these hills, really, guys. There's a lot going on. Well, last week, in summary, stock markets got absolutely spanked. FTSE and Dow were off a good 5%. The likes of the Greek market, the IBEX in Spain got absolutely rogered. In fact, someone's told me that I think Spain, Italy, Russia and Brazil are off more than 20% now from their peak, so they're in a bear market now. There's just not much positive reading around. Having said that, though, I sort of feel that we're due for a bit of a pause in the route that we've seen. Nick, I don't know what you think, but we had the monthly expiry on Friday. That's the options. The monthly options went out on Friday, and that can be a sort of defining moment. So I'm wondering whether we're in a bit of a pause and hold mode now on some of the indices. I note that the FTSE is up 23 now, so that's rallying as we speak. So I think we're likely to get some sort of a rebound here. Let me put up my multi-page here, just so you can see here. You can see that, actually this is 15-minute, let's put this on to daily. You can see here how far the likes of cable has gone, dollar, euro at the top, euro sterling top right, euro yen, Aussie dollar, gold, all starting to turn. I'm actually just going to have a quick look at FTSE and the bottom right as well. So when I click on this, hopefully you'll see FTSE appear. Bottom right here, this is the chart I'm just focusing on at the moment. We've had such an amazing route. I thought it would hold the 76 level here. We have gone further. It's likely that we're going to rebound first. So I was targeting this pivot down here when we last spoke on Thursday, 51.37, having broken down through this 53.75. We've actually hit this pivot put in around end of September from last year, around the 52, 55, 56 area, and we're bouncing now. So the likelihood is that the market is probably in a period of sort of backing and filling at the moment. We can politely call it profit taking, I think is the best word. Gold. I know you've been talking about gold, and for all you gold bugs there, and there's quite a few of you in this. Do you remember we were talking about that 1642 level? You want to know how the power of these pivots? That's the power of those pivots, the magic numbers. You need to focus on these, the key target levels. We said 1577, after 1577, 1542. Look what happened, team. A significant move. The reason why it's rebounded and the reason why you've made so much money on Friday is that the 240, which I'm going to put up now, turned nicely on Thursday, in fact. So you were well prepared for that. Look where we're at now. So I think it's likely, having seen such a turnaround in gold, and we rallied in excess of $70 from the low. Yes, $70, that's 700 points. And I know, obviously, Nick, you're probably making money. Who are the gold traders here? Hold your hands up, please. Gold traders wanted. I'm sure most of you should be or are, because this is where we're all making the money. Just fantastic markets. And obviously the related markets, silver. I heard Adrian saying that people were trading silver. I used to be a big trader of silver myself. And the other precious metals market that aren't quite so popular that I was looking at the other day were platinum and palladium. But to be honest, you don't need that many markets. Gold and silver, and gold especially, as I say, is just brilliant. Anyway, let's go back to what I'm supposed to talk about, which is what's going on in the markets. Last week, gold, as I say, hit that low. The rebound, by the way, there's always a fundamental reason, and we heard the news about the Chinese buying and the outlook there, which spurred a bit of short covering on Wednesday, Thursday. So that's rebounded sharply. Oil and other commodities are very weak as the US dollar continues to rally versus the euro. So why do commodities come off when the dollar rallies? Well, they're priced in dollars, so in other currencies, obviously, it makes them more expensive, so they have to come off in dollar terms to reflect that. So that's the reason why the likes of gold has plumbed sort of $14 from its highs in the last month, quite significant there. You wouldn't know, though, looking at the pumps. I don't know whether I'm always sort of paying 140, 143 a litre, whether oil's at sort of 110 or 94, whatever it is, and that's WTI, not Brent, by the way. Other than that, well, reasons for the moves, I'm sure you know. Here's an article from the FT. Here's another one about G8. Here's another one from this chap, Wolfgang Munchau, who's the deputy editor of the FT. It's all to do with Greece and Spain. We know what's happening in Greece. Greece are in limbo now. There is no party that managed to secure a coalition, and there is a big fear that they're going to exit the euro and the eurozone. But that actually now is not the main story. What's been happening, there has been a bank run. Why a bank run? Well, it's different to the banks suffering in Spain, which is what I'm going to get onto. A bank run in Greece, basically, if there's going to be an exit from the Eurozone, or as the FT are calling it, a Grexit, people want some sort of certainty, so they're taking the money out, their euros out, in the hope that they can hold on to those euros, and that there's a feeling that if there is an exit, and no one knows how this is going to happen, it would involve converting euros back into some sort of drachmas, and the belief is that's going to be at a very disadvantageous rate. So that's one of the reasons why there's a run on the banks in Greece, although I have to say it's hardly a run just yet, and it's people like me that could spook all this, of course, but I'm only reporting what's going on. In Spain, the stock market is back to sort of 2003 levels. There are major concerns over the health of Spanish banks. We had that downgrade by Moody's of 16 Spanish banks, so Spain is really perceived to be a massive risk now because there are more unknowns than in Greece, would you believe? Jonathan, can you tell me why Greece is such a shock to markets over the last few weeks? Well, there you go. All of us knew for 6 months it would need to leave, so why the shock? Well, I think the fact is, Jonathan, none of the institutions, that's the ECB or any of the other Eurozone members, were prepared to even mention the topic of exiting from the Eurozone. But because of the recent election in Greece, where this Cyprius, this 37-year-old from the anti-austerity party, has won a sizable chunk of the votes, and there is a lot of support, really, because Greece has been in austerity mode for 5 years, Jonathan, and it's been suffering considerably, and I think enough is enough as far as they're concerned. And I think we're seeing a little bit of this sort of anti-austerity brewing up, really. I've just put up a page from the FT here about this G8. If you remember last Thursday, we were talking about the happenings on Friday, the G8 summit in Camp David in the US. It's a bit of a talking shop. It happened on Friday and Saturday. I say talking shop because, they just basically reiterated what you and I know, Jonathan. They've got to do something about the problems in the Eurozone. It's very much split over whether we should be, or the Eurozone should be stimulating the economies, or they should be repaying back all the debt and tightening their belts, which is austerity. I think the answer is perhaps a little slightly less stringent austerity and a little more focus on growth. But the fact of the matter is, these economies will all be punished if they're unable to pay down their debt. People say to me, well, actually, how come the US has got away with it effectively? The US has not gone under any austerity, really, despite its massive debt pile. And it's able to stimulate its economy through various measures, QE, various initiatives from the government, etc., and not suffer any of the consequences. Well, the fact is, it's got the dollar, and it's the world's reserve currency, and it does not have the same setup as the Eurozone, for example. Of course, it is one government, one federal government with one taxation system despite local taxes, etc. And it's able to control things a lot more carefully than the Eurozone. So, yes, bit more austerity, a bit less austerity, a bit more stimulus possibly. But what this has done is it's putting a lot of pressure on Angela Merkel now. Hollande, the new French president, obviously has been voted in on really on a growth ticket, really, on a number of issues. But so he's very keen to try and promote growth and try and de-emphasize austerity. And obviously there's a bit of a mood, as I say, in obviously definitely in Greece and in Spain. There are a lot of demonstrations in Madrid. And of course, even in Germany, in North Rhine-Westphalia, as I said last weekend, Angela Merkel's party suffered quite a setback as voters have voiced their displeasure over the continuing austerity that's been imposed on them. So all is not well, really, at the moment.